Welcome and thanks for stopping by. I'm Coach Craig with Digital Micro Trading, and we're going to talk about the rug pull in the stock market Monday that happened. As I speak to you, we're in Tuesday, Asia Globex, but the Asia markets are closed for New Year holiday, Lunar New Year. So if you've been watching my past videos, especially last week, I've been really drilling into the location, and we had seriously, before I get into the charts, location's everything. And we had on the S&P E-mini upper Bollinger Band for 3 days in a row. Okay. So that's number one. And not to say that I'm perfect on location all the time, but I definitely know when not go long when we're in a high premium daily chart upper Bollinger Band for 3 days in a row. Just like I pointed out a few weeks ago, we were at lower Bollinger Band on the daily. So again, we got to get the location straight. We'll go over that in the charts, and then I'm going to talk a little bit about this whole thing with embodied AI. What is it? So here's what Google says. Google says it's the use of AI to create physical entities that can perceive, learn, and interact with their environment. That's a mouthful, right? So two examples are going to be ChatGPT and DeepSeek. So overnight, DeepSeek beat down Nividia. Nividia took a hit for Monday's negative 16.95%. How's that for a rug pull on Monday? It took down the SOX, the Semiconductor Index corrected 10.34%. So really, that's why the NASDAQ 100 got smashed and beat up compared to the S&P 500. So we're going to go through the charts. I do want to talk a little bit about options because the one big thing is I think rug pulls are going to be a lot more common in 2025 than they were in 2024. And that's why, again, I'm really big on going long on puts, long option puts specifically, not calls, puts. So when I see those upper Bollinger Band days on the daily, you know what I'm going to be doing. So let's get to the charts. Weekly chart on the E-mini S&P 500. So here we are, Tuesday Globex, and you can see the damage isn't too bad because you see the candle wick right here. This wick, here's the body, here's the candle wick. It's a discount wick, and we did penetrate and pierce through the middle Bollinger Band, 59.86. That is the middle. So we went through it, and we went down to about 59.48, but we went right back up. So we're no longer in a discount. The wicks do the damage, but the bodies tell the story. And what the story is, we've got huge earnings this week with over 20% of companies reporting on the S&P 500. But the other thing is that the big techs are going to do. So Meta, Microsoft, Apple, and others are going to be reporting. We've got FOMC and Powell going to be talking on Wednesday. Consumer confidence later for Tuesday at 10 a.m. Eastern. So we are really going to be jam-packed with catalysts. And Friday, we've got a major inflation report in the morning. So it's just really going to be important to know where your location is on the higher time frame. And this is important just to watch this. So the red 9 EMA 6029, the blue 6054. Keep in mind we're above 6150 on the recent high, and that's important. Why? Because you have to go back to relative equal highs back in December when we hit all-time highs. We did do that previous week with a candle wick, premium wick. Today was a discount wick, and we pierced. So that's it for the weekly. Let's hit the dailies. 3 charts. Daily is a whole different ballgame than looking at the weekly. Bitcoin on the left. So you can see here, Bitcoin, here was Friday close, and we were above the middle, above the 9, and even we closed above the 3 EMA, and we had just barely come off the upper Bollinger Band. And then Monday, we come in and we go and pierce that middle Bollinger Band right here. So we closed above it. Here we are sitting right now, Tuesday, Asia Globex, even though Asia's not trading, and it is above the middle, but it is below the 3 EMA. Let's look at S&Ps in the middle. S&Ps in the middle, well, this was the third Bollinger Band hit that I already pointed out. Remember, 1, 2, 3. So that was totally overbought in a premium. And then look at this gap, volume imbalance. It's a real liquidity void here. You could drive a freight train through this thing, and it opened, and we go all the way down here to not 5947.75, and we are above the middle, so it's not a classic discount. It is slightly above on a premium. We're below the 3 EMA, just like Bitcoin. So currently a 6045.5, and we've got a ways to go before we hit London, but we are into Tuesday trading, and this is a downtrend that's not stopping. And the NASDAQ, of course, is the weakest because it's got a lot more tech and semiconductors in it, and it is below the mid 21,421. And it's below everything. And we got to really watch that and see what happens. Again, news driver catalyst, I would say maybe not such a big thing on Tuesday, but I'm not going to rule it out. But it is a 10 a.m. Eastern Standard catalyst. And then again, really big deal on Wednesday, which is the Fed move and what they say. Remember, two-stage delivery on Wednesday, the actual FOMC release notes, and the 2:30 Powell statement. Okay, let's go to the next charts. Canaries in the coal mine, US dollars at the lowest close for 2025. We really want to watch the bookends on the dollar and the Treasury 10-year. So that's got also the lowest close of the year for Monday. So my big issue with that is somebody's lying. You've got the Treasury yield and the dollar down, okay? So that's one thing. But you also had the equity markets, stock markets down. That's not right. It's inverse relationship. Whenever you have something that's not right, you need to immediately understand there's intervention, there's manipulation, something's going on, because there's always an inverse relationship. US dollar treasuries, if they're going up, stock market's going to be most likely having pressure put on it, and it's going to go down. And today we had Monday down, stock market down. The only thing that was up was the VIX. But look, we got to 22.5 and we closed at 1790. That was a big drop. Now I've got these square boxes, which are fair value gaps, and fair value gaps, again, have not been violated on the downside as the close of Monday. But look at where we were before it. We were in the high 14s. So that's something to watch. If volatility stays elevated, we'll watch that. But already you can see here on Tuesday Globex, little baby green candles on both the dollar and the Treasury yield. So we'll watch that. But that's what I wanted to point out. Very important, these three charts that go along. If you trade stocks and you read charts on stocks or indexes, equity indices, even Bitcoin, you want to be watching these three charts. I've got Renko with Keltner channels, and you can see the red line is in the middle, so we're at a premium, and 6040 is where we're at, or a little bit above. And so I'm going to watch this. We basically, I want to know the range, and you can see this big drop on Monday here on the left, and then we pretty much in the afternoon just kept in the range of the middle, and we stayed above it. So the middle is 6029. Here on the 2 hour on the right side, what I've got is Bollinger Bands. And the reason I go to a 2 hour here instead of a 4 hour is I want to go on a higher time frame, but I'm looking for the width. I want to see wide Bollinger Bands and see, first of all, where's the high, the low, and the mid comes in at 6069, and we're below it. So we have not reached that. And so technically this 2 hour is still in a discount versus the Renko is in a premium. And I showed you the other charts on the weekly. They were showing on a high time frame, we were above the mid. We've got mixed signals here depending on time frame, and we've got big news catalysts and big earnings. So again, gonna watch everything. I don't think necessarily we're done on the downside. We'd really have to go and close above the gap, and I'll show you exactly on a small time frame all the different gaps above and below and what we're looking at. But these are two charts I definitely look at during the day multiple times. I want to see the range. I want to see where we are. And then I'm going to look at the best high time frame with wide Bollinger Bands. And this 2-hour fits the bill here. Next chart. 15-minute chart, my go-to chart on trading. Before I go to a 1 minute, I've got to see the relative equal highs, lows, where's liquidity. 15-minute chart is important. So this is the naked chart. You can see the dotted line here. This is where we had the low of the day. And it was way before we had, about 3.5 hours before the regular trading hours in New York. And then I'm going to go ahead and show you all my levels right now. I know this looks like a lot, but the first thing, if bulls want to front run the news catalysts at 10 a.m. Eastern, regular trading hours, they've got to go through this red line here. This was the open range for Monday mid, not even the full range. This was the mid at 606, 3.75. Above that, just a whopping giant new week open gap. It's been weeks since we've seen anything close to this. 6106.5 by 6131, just massive. So I really doubt that's going to happen on Tuesday, that we close this gap. Anything can happen though, but when we're talking about the FOMC and Powell, that's another story. So this is something to watch the whole week with all the earnings reports and all the economic reports that are going to happen. This is the line in the sand. And I can tell you right now, if we get back up here before the first, I'm going to start looking for initiating shorts. But I've got to worry about February 1st buying. So I'm just real cognizant of seasonality here, of where we're at, and if we can close the gap. Now, on the downside, we've got first fair value gap here from Monday, and that's coming in. CE, consequent encroachment, is 6020. Okay, so you see we spent a lot of candle bars in here. And when was this? This was the open, and we just couldn't really get escape velocity until when? Again, the last 15 minutes of the regular trading hours. That's always a time when they really manipulate the price. And we got above it at the open, but then we came right back down at 11, and we just stayed in there all the way into the open range. I didn't even mark out the afternoon open range just because it was so close to this first fair value gap. And again, it's pretty wide too, 6023 by 6016. So very wide. Below that, if you go down further, again, this big, thick red line here was that Globex low, and that's that 59.48. And that was almost where we had the new day open gap for the start of the year. So very important. The traders, or the algorithm, you could say, didn't want to go below that. That was the line in the sand. But I definitely see we can go back down to the 620s. And the whole point is, are they going to want to defend? So what's below 6,000? These are the December 23rd new week open gap. Below the December 23rd new week open gap, we've got the January 6th new week open gap right here. So that's 59.93 by 59.89 and a half. And below that, you just have all the candles in Monday. The bodies of these 15-minute candles were all that 6 to 8 a.m. Eastern. That's all in the 58, 59, 88, 59, 74. So those are the levels. I do think it's possible totally to get into these new week open gaps. I'm not really calling for lower than that on Tuesday unless we really get something like a news catalyst that sparks, or something out of the ordinary, some kind of news we weren't expecting. So let's go to the last part of this video now. The last part of this video, I want to wrap with the options checklist. 7.13%, 2 trades for the month of January. So let's get at it with the checklist.